Agenda items 4, 5, 6 and 7 are recorded by Hansard. Apologies have been received from John McAllister, who I believe has become a follower for the second time, was it?
Third time.
So congratulations to him. Any other apologies? No. We have another draft minutes, pages 5 to 10. Members content their accurate record. Agreed. Matters arising can refer members to the request for information, and that's at page 12 of your packs. Moving on to the first evidence session then, in regard to the rate replacement scheme. Can refer members to the AFP briefing paper at pages 14 to 28 of your pack, and also refer members to the DFP second consultation document, pages 29 to 112 of your pack, which I'm sure you've all read, and that's also provided for background. Can I welcome to the meeting Brian? You're very welcome back to the committee again, and Roisin McCrory from the Rating Policy Division. Brian, do you want to perhaps make a brief opening statement, including the recap on the background to the rate replacement scheme issue and recent developments? I'm just conscious that there's some new members of the committee who might not be able to us all the detail of this.
Thank you, Chair. Good morning, everybody. I suppose the background to this is part of welfare reform. It's a part of welfare reform that has already been implemented in terms of a 10% cut has been applied to council tax benefit in GB, and the corresponding scheme in Northern Ireland is rate rebate. So from April 2013 we've already been subjected to a 10% cut, which represents about 13 million, I think, in the first year, and recurring, in fact, increasing as time goes on. So this is not a reform process that we're coming to the table and saying we wish to improve the rating system. This is having to deal with the difficult circumstances of a reduction in funding for rate support for households. We have had 2 consultations, public consultations on this last year, and we've just concluded the second consultation. We have found these to be very useful engagements. The second consultation, which concluded on
the end of October.
On the end of October, we found to be a very useful engagement, and as a result, we got 20 responses to the consultation, 2 from ratepayers, but 18 from what I would describe as the advice sector, and we've had a very positive engagement with that. And that engagement has gone beyond the normal consultation process. So not only did we have the formal consultation, but because of the responses we received from that consultation, we had a further round of discussions with the advice sector on the various proposals. So I'd like to report back on where we are with that. In relation to rate rebate is now a devolved matter. Previously, it was part of the National Social Security System, and Westminster has devolved that to Northern Ireland with this 10% cut. So we are free to devise our own policy in relation to rate rebate and protect those who we wish to protect. In relation to the proposals that we've gone out to consultation, we view this as a bit of an interim step, because longer term, as and when universal credit is introduced, we think we're going to have to fully redesign the whole system of rate support so that claimants don't have to make 2 claims and avoid all the intricacies associated with people having to provide information to government departments. So we would like a bit more joined upness in the future. But so the proposals that we're talking about at the moment are to deal with an interim position. Interim, we would think, would be 2 or 3 years. Currently, the main rate rebate scheme protects 220,000 households in Northern Ireland. Probably about 4/5 of those, because of rate rebate, pay no rates, and the remainder would pay a reduced rate. So it is quite a significant policy that we're talking about. In terms of what the current thinking is with our Minister and with officials, our view is that the main scheme should be protected. This is not This is not what's happening elsewhere in the UK. In parts of England, many local authorities have chosen to top slice their schemes or target their schemes in a reduced way. So what we are proposing, and this is probably the main headline in relation to the policy on this, is that we wish to retain the main elements of the current scheme. However, the current scheme currently operates with the existing suite of social security payments. When universal credit comes along and the first claims start to emerge, we've got to find a way of getting universal credit to work with rate rebate so that claimants aren't required to provide a lot more information, and there can be much more automation of providing awards under rate rebate. So that's a key part of the second consultation. And the second consultation goes into a lot of detail as to how this would operate. I can go into the detail of this, but I'm not sure whether this committee would get a lot of benefit through me going through all the mechanics of that. It's set out in the second consultation paper and it's addressed in the consultation report, but I'm more than happy to take questions on the detail. Other elements associated with this process are what are we to do with other rate reliefs and allowances? Because the clear message that we got from the first round of consultation was that the advice sector felt that we shouldn't continue to pay all of this out of public expenditure, that we should look at other forms of reliefs and allowances that are paid through the rating system to help make up the shortfall. So that's a very difficult issue to deal with. The proposal we set out in the second consultation was that the top-up scheme, that's the low-income rate relief scheme, should be removed as soon as possible. That has a policy logic in terms of faced with cuts, you would remove a top-up, but it also has an impact, of course, and we're more than happy to talk about what the impact of that would be. Final decisions haven't been made on this, by the way. I'm just outlining the kind of contextual thing. In relation to other reliefs and allowances, there were varied views on this out of the consultation in terms of whether we should look to lone pensioner allowance, whether we should look at the valuation cap, whether we should look at disabled person allowance and all the various other allowances and so on. But as I say, we haven't put proposals yet to the Minister, but we will be doing so in the coming weeks. So that's a very brief background to where we are. Would you like me to... There was also the issue of whether we needed a hardship scheme associated with these changes, and the views on this were mixed. There were some in the advice sector who felt that hardship schemes don't really get to those in greatest hardship and are very difficult to administer. And recognising that, they thought that the money might be better spent in ensuring that there was greater take-up of people's entitlement and greater information and awareness. So, as I say, we have been looking at hardship schemes. We haven't found we haven't found a model yet that we think could work. But more importantly, I think it was important to note that the advice sector certainly weren't enthusiastic about a hardship scheme. So that's some of the broad issues that we have been looking at. But there's a lot of detail in there, and I'm more than happy to answer questions on the detail. There's a particular detail about how we can get universal credit to work with rate rebate, and there are various models that were presented in the consultation paper with examples as to how these would operate. And that has been the subject of a lot of very detailed discussion with those in the advice sector who are experts in means-tested social security.
Thank you, Brian. Just in terms of process, you said that you'll be going to the Minister shortly with proposals. When would the Department be in a position to come to the committee with a fully developed preferred way forward, and what is the timetable?
Probably about March, I would have thought.
March to the committee. And what is the timetable thereafter?
Well, the timetable thereafter, yes, I should explain that Currently, although the funding cut has occurred, rate rebate continues to operate as if it's part of the social security system and operates under that legislation. From from April 2015, all new claims for rate support will be a DFP scheme, and then from April 2016 they will all migrate over to DFP. Currently, the Housing Executive would handle about 2/3 of the 220,000 claims. It's about 160,000 claims are handled by the Housing Executive. Those will all move over to LPS from April 16, but new claims will be handled by LPS from April 15. So that's the proposal in terms of the administrative arrangements.
And light two of the consultation, what further assessment is DFP making of whether to retain or adjust other forms of rate support? I'm thinking in particular of the maximum cap of 400,000.
Sorry, in relation to the analysis that we've undertaken, or
in response to the consultation? In
response to the consultation, well, some respondents were in favour of it. Yeah. Some were not. The Non-Iron Fair Rates campaign were particularly opposed to it. Others, I don't have the detail in front of me, but...
No, but I mean, yeah, all of those will be put to Minister to look at the various reliefs and what might change.
But have you a particular mind to that particular aspect, or...?
No, we will be putting. We will be presenting the Minister with a range of options. We have no particular preferred preferred relief that we think should go, other than I think the preferred option is the removal of the top-up scheme. But this is in addition to that. Any additional reliefs, we have no set views on that, but we will be presenting the case to the Minister, and who will be then presenting the case, of course, to the Executive, because this will be an Executive decision.
Yeah, thank you, Chair, and thank you, Brian, for your presentation. Chair, I think it's fair to say that as MLAs, this would probably be the biggest single issue in any given year or month that we would deal with in our constituency offices. The fact that people no longer can afford to pay rates and need further assistance in doing so. My concern, obviously, is with the rising levels of poverty, job losses, and deprivation, and the impact that would have on families. We are obviously maybe in receipt of an assistance at the minute, and maybe no longer will qualify with the level of support if that's reduced. I think, and you did allude to, this will go to the Executive. I think the Executive does need to continue to support the scheme, and if and indeed enhance it further. So I mean, I'll wait till we get the presentation from the department to hear more. Thank you, David.
I take that point, and what I would say by way of clarification, there'll be no change in the way that those of working age here in receipt of any of the normal social security payments will find their entitlement changed. Similarly, for pensioners, that will not change for those on the main scheme. So the 225,000 households that we're talking about will continue to be protected, and I think that's the big headline out of this. The issue is one of shortfall that we're faced with, and the introduction of universal credit, and how we can get universal credit to work effectively with rate rebate to ensure that claimants are easily passported to rate support, and that's part of that's a major part of the second consultation.
Okay.
Okay, Adrian.
Yeah, thanks, Chair. Just I agree with what Keela said there as well, but I want to just ask you about, Brian, about the 4/5 that the Housing Executive deal with now, and they'll be transferred over into LPS.
It's about two-thirds of the claims. Yeah.
Well, 2/3.
Yep.
Are they not going to put more pressure on LPS, and have they got the expertise to cope with that?
Yeah, well, LPS are already engaging very intensively with DSD and the Housing Executive in terms of managing this. It's going to be a staged migration. The first stage is going to be from April 15 all new claims will pass over to LPS, and then from April 16, all the claims will move over. So it is a staged approach to that.
Just worries me a wee bit because the agency have been dealing very well with these people, and getting these claims through. So, it worries me whenever we pass over to LPS, it'll be some backlog or something like that there, and that's something we need to ensure it doesn't happen.
Right. Well, I agree that this needs to be done well. LPS, however, already deal with all the rate rebate claims for owner-occupiers, so they do have a housing benefit section already within LPS. That will just have to be enlarged, and their systems will have to be changed to allow for that. So they do have expertise in-house to be able to deal with rate rebate. It'll just be a lot, the numbers will be, a lot better than they've been used to.
You scare me a wee bit whenever you say LPS systems will have to be changed. Never it happened before. We had a very good experience on it there. So
that's what we've been saying for years, isn't that right?
Thanks.
Okay, Peter?
Yes, thank you, Chair. And thank you, Brian. You're right in terms of the big headline figures on it, but I suppose just so we can get our heads around in terms of quantification, you obviously mentioned about, if you like, the transfer over, but at a 10% reduction on that. Now, I appreciate, given, if you like, the percentage share, that as years move on will be a bigger figure, but I suppose to give a quantification, first of all, in terms of the what that equates to, moving ahead sort of in terms of the immediate figures. And you've mentioned also, again, the other thing as well is that there's obviously, as we're considering precisely the way to go forward on this, there's a range of options and maybe a cocktail of measures that may well be considered as part of that. By the same token, I think there may be a danger sometimes that people may fixate on particular issues which, in terms of the actual quantum, will be relatively small one way or the other in connection with that. You mentioned in terms of, at the moment, although no decisions have been taken, that the most obvious route from a big ticket item, and that is the issue of the top-up, which, instead of attacking, if you like, direct entitlement side of it, just in terms of then, as you're outlining from the financial point of view, you mentioned about the impact from the top-up side of it, and those in particular, if we're looking in terms of quantifying the hole that needs filled, if that was one issue that was at least being considered on that basis, what impact that particular action would have in terms of meeting the shortfall, or at least reducing the shortfall?
Yes, 6.7 million, I think, is our current estimate of that. What I would also 6.7. If we were to remove the low-income top-up scheme, it would save 6.7 million.
Yes.
Which would be about half what the current shortfall is.
We're looking about roughly about 13,
so about 13 million. The current scheme, and we're going to have to sharpen our pencils in DFP on this to make sure we get the figures exactly right, but our current figures are the current scheme costs 130 million, and the funding of that, it has been reduced by about 13 million.
Okay.
So that's the gap that we're currently working to. As I say, the figures may well change as we get more accurate figures as to actual costs, but at the moment, those are the estimates we're working to. This cut applies to the devolved administrations in Scotland and Wales as well, and it also applies to local authorities who administer council tax benefit in England. So that cut is already applied throughout the UK.
And in terms of, and I appreciate, any of these things are always going to be a certain level of averages, in terms of, and I suppose things will operate differently. If we take a snapshot of if, for example, as part of the overall package, that the top-up scheme was coming, if you could maybe just talk us through how that would impact in on the average individual who would be in receipt of that. How many, let's say the 6.7 million pounds, how many people are benefiting from that? What is the impact? What level of support would remain with them?
Yeah. Well, there's a danger in averages, as you know.
No, I understand that. I understand. In terms
of the claims that are handled by the housing executive, you're talking about £2.62 a week. In terms of the claims that are handled by LPS currently, which is the owner-occupied sector, it's £4.36 a week. So the overall average is £3.49 a week. So that gives you an idea. But as I say, there's some people, there's some extremes within that. Some people with tiny amounts below that, and some people with significantly greater amounts. But in total, the top-up scheme either gives extra relief or provides new relief to about 38,000.
Okay, thank you, Chair.
Okay. Mitchell?
Yeah, thanks very much for that. I'm actually encouraged just by the, by the lateral thinking that's going on as well, and I think, as Peter mentioned, the fact that there was a range of options identified for people, because it does actually help you to get your head around the complexity of this, and it's not surprising maybe that all of the options would have maybe attracted some support. There's lots of perspectives applied here, and I presume it'll be some kind of a cocktail of best options. It also, and I'm starting to get an understanding of why there was what appeared to be a very preemptive move to bring the LPS inside the department. It's starting to make sense to me now, I have to say. I can see why the Minister wanted to keep an eye on that particular operation if there is this transfer of function and they have a key and a central role. I'm not even arguing against it. I think these are good ideas that should be teased out, and we'll see how they apply. It seems to me, listening to that we are effective. Well, we're talking about removing top-ups, we're then talking about compensatory responses. Within whatever kind of budget and finance that we can manage. Recognising that there's a lot of people who are genuinely struggling to manage. The economy hasn't developed. The employment opportunities aren't there. And we will continue, I think, to have to address a whole range of issues, from housing stress right across to people who are slipping into poverty. And these measures introduced by Westminster will have a direct and without a question a detrimental effect. So we are trying to figure out what the bolt-ons are that would alleviate or ameliorate some of those impacts. And I think on that basis we should be supporting what you're doing to try and identify solutions here, and hopefully as well solutions to the divisions between the parties. Because there's different approaches and opinions here as well. But at the end of the day, we have a job to do. And I think at the end of the day we probably share a concern about driving people into hardship because of all the consequential social and health problems and costs that will impose on us as well. So I'm taking a lot of encouragement just from the approach, and I commend the department and yourselves for being so open with the department. There's probably a wider debate to be held here, which would maybe facilitate the parties being able to reach understandings and agreements on how we step forward. I'm not sure about the whether there is a quantum in terms of the amount of money that can be allocated to this process, and whether we're working within a budget that either is sufficient or would have to be negotiated. I'm also not certain that we've covered in the discussions all of the options, including the question of minimum wage payments in the public sector, given its predominance and power in our economy. And whether the introduction of a living wage would actually have an effect of actually helping to keep people out of poverty, because we will then have to pick the tab up if that happens. So I think there's options starting to open up here as we tease this out, and I'm encouraged by it. Thank you.
Thank you for that. It's going to be a very difficult financial environment in which we're going to have to operate this scheme, because previously it was annually managed expenditure, and now it's going to become departmental expenditure limit. So before, whatever the demand was, it was met by Westminster.
Yeah,
that's not going to be the case anymore. So
you're going to know in advance.
So it puts a lot of pressure on the department to ensure that we live within whatever budget we have to do this. Currently, the Dell transfer, as I say, is 90% of the recent AME cost for that scheme. So we do know what cost envelope we're working within. It was very interesting that the first consultation was very clear from the advice sector. They understood the pressures on public expenditure, and it took a very measured and mature view of this, that they felt that we should look within the rating system first to see whether there is scope for rationalising the current range of reliefs and allowances within the rating system to help pay for this. So we didn't have to fund it all through public expenditure. There may well be a case for funding some of the shortfall through public expenditure. That's a matter for ministers.
Yeah.
I mean, in terms of our job, we will be presenting a range of options as to how you could make up the shortfall. But the decisions will be political, but we will be advising ministers on both costs, implications and impacts of removing or reducing each one of those. And we'll be doing that within the next few weeks. And as I say, it'll first go to our minister, and I'll be more than happy once that's done to brief the committee, and it'll also have to, of course, go to the executive.
Thank you.
Deputy Chair.
Thanks, Chair. Morning. I see there you were pleased with the level of response you got, and the I think it was the Model 7 you said attracted the Model 7.
Oh, yes.
Attracted the most favourable
Yep.
comments.
Yep.
But Models 4 and 5 were also well supported. So, what exactly are the next steps?
Yeah, well, Model 7, because of the responses we got from that consultation, we had a further round of engagement and developed a refinement of Model 7, which is now, curiously enough, called Model 8. And it was an improvement on the previous proposal that we went out to consultation. So we had a further consultation event with representatives from the advice sector at that event, and we did that just before Christmas. And this has helped us refine our thinking. We provided further analysis to the advice sector on that, and now I think.
What was the response on the new model, the Model 8,
Which one was it?
from the advice sector?
Well, some people were still wanting some of the elements of Model 7 to go forward, whereas others saw Model 8 as a new model, really, as a positive way. And there's cost implications. Model 7, as was, would cost an extra £6 million, whereas Model 8, which was more refined and using more of universal credit information, would be. It wouldn't cost. There's no additional cost in doing it. But as I say, it's using more of the universal credit information.
Right. Can you sort of summarise the main difference between Model 8 and Model 7?
Yeah, Model 7 was the basis of that was that anyone who has their full eligible rent met in universal credit should be passported to rate support without need for any further assessment. Whereas Model 8 is more about still using some passport, and the basis of it was that all those with zero income taken into account in the assessment of their universal credit should be passported to rate rebate. But that we, instead of using housing benefit rates, that we would use the what is known as the maximum amount for universal credit, which is the amount that the government is setting out that people can live on under universal credit, and that we would just lift that information and use that as to measure against whether you should be entitled or not. And then using the current housing benefit means of taking account of income, which would include taking universal credit into account as income, and then enhance the current housing benefit earnings disregards, because that was one of the comments we got, that there wasn't much work incentive. So we suggested then enhancing the earnings disregards by 50%. That's the amount of earnings that's ignored when you're assessing, taking into account the amount of earnings. So the current amount of earnings disregards vary from £5 to £42 weekly, depending on individual circumstances. So our proposal in Model 8 is to enhance that by 50%. And as I say, the outcome is that it wouldn't cost any more. It's actually shown a savings of 1.2 million, but I really don't think that we can take that as
savings in that would be when universal credit is fully operational and that every single person who would be entitled to it has claimed it. So it's probably cost neutral.
Yeah, I'd be more than happy. There's a lot of detail on that. I'd be more than happy to give you a separate paper on this, outlining the differences between Model 7, Model 8, what the advantages and disadvantages are, and give you some examples as to how this will work in practice. If the committee would find that useful, we'd be more than happy to provide that.
Can I just ask you, so do we take it then that going forward, a Model 8 will be the basis for the eventual outcome?
That's in terms of what we'll be putting forward to the Minister, yes. But the Minister will make his own mind up on this, but that's our current preferred approach, and it's one we think that has the support of most of those within the advice sector. So, you know, we had a very positive and intensive engagement with the advice sector over a number of weeks in relation to developing these models. So, I won't say we're confident that the Minister will agree, but that will certainly be the preferred option we'll present to him.
Okay. It'll be interesting to see your detailed paper on Model 8, but thank you very much. Thanks, Chair.
Just one final question. I see that the Institute of Revenue's rating and valuation in paragraph 21 make a point, and it sort of follows on from what Michaela was saying there. It says there will need to be an effective evaluation of the consequences of the removal of the low-income rate relief and the possibility of one-off transitional protection scheme for certain cases. And you had made the point you'd be bringing forward an assessment of the impacts of this. Will there be an assessment of the social impacts, or how much detail will you be going into in that regard?
Well, it'll be impacts in particular households. It'll be our assessment as to what particular households will lose out. So yes, we have done that work, and we're more than happy to present that work.
And do you have any view on that one-off transitional protection scheme?
I suppose it's wrapped up also in the issue of a hardship scheme, as to whether we have a hardship scheme. The transitional protections can be very complex and very difficult to administer. We also, if the purpose of this is to try and save some money to help make up a shortfall to preserve the main scheme. So if we have too elaborate a transition scheme, we lose that advantage in terms of making up the shortfall. But that's not to say that we won't give careful consideration as to what mitigating measures we can take so that the very hardest cases don't emerge from the removal of the top-up scheme.
Okay, members. All right, Brian, thank you both very much. As advised, members, Brian will be staying on to discuss the next agenda item. Firstly, can I seek agreement to copy the DFP paper to the Social Development Committee by way of an update given the cross-cutting interest? Agreed. Moving on into the rates convergence and proposed funding mechanism for transferring functions. Members to the DFP reference in this subject at pages 14 to 16 of your packs. And can I welcome Andrew McAvoy from the Rating Policy Division to the meeting as well. Do you want to make a brief opening statement on this before we go to questions?
Okay. Thank you, Chair. As the committee will appreciate, RPA is a DOE issue, and it's a DOE-led issue. But I think it's important to brief this committee because there are certain implications for the rating system and the development of policy around RPA and DFP's role in facilitating RPA by making changes to the rating system. It is something that has come up sessions, well, certainly in the most recent session on the non-domestic revaluation. There were questions asked about it, so it kind of has prompted us to think that now is the time to tell you what our thinking is and what our minister's thinking is and what we are doing about helping to facilitate RPA in the context of rating. The first element, and probably the most significant of this, is managing rates convergence and the development of a transitional relief scheme to protect ratepayers who would otherwise face sudden and excessive increases by councils coming together, and also by some ratepayers moving into Belfast from Castlereagh and Lisburn, because without intervention they could face significant increases in district rates. So it's that's our objective. In terms of where we are, the executive took a decision about a year ago, I think it was, to provide funding of up to £30 million in total to fund a transitional relief scheme. So that's what we've been working on since then. In relation to the legislation, we've already got an enabling power within the
Local government bill.
Within the local government bill, so the enabling power is already within the bill to allow that to happen. So we will be presenting in due course regulations to this committee once we have finalised the scheme, because DFP will have to make regulations through that bill. In terms of how the scheme will operate, we looked at a range of options, such as providing grants to councils, but we have decided, and ministers have decided, that the best way of doing this is to allow councils to strike their rates in a normal way, and for a discount to be given to relevant ratepayers on the face of the rate bill. So councils won't have to strike differential rates to edge rates up to a common district rate. That will be applied at a bill level by DFP working with DOE. And our current view is that we can develop a reasonably generous scheme in terms of stepping increases over a 3 or 4 year period, and all the modelling that we have carried out with colleagues in DOE suggests that this is doable within £30 million of funding. We can't take that analysis any further until we know what district councils will be striking in their rates this coming year. But once that takes place, we'll be able to do a lot more analysis and refine the scheme. Elements of the scheme that have not been decided are the duration of the scheme, what the steps will be, whether it's 33%, 66%, 100%, whether it'll be whether there'll be a threshold applied in terms of acceptable increases, whether you might want to put in a threshold, an inflationary threshold, beyond which affected ratepayers will be protected. So those elements will have still to be decided, and we will certainly be consulting on that in the spring when we've undertaken our further analysis, when we know what the district rates are. The approach we have taken has been validated by the Institute of Revenues Rating and Valuation. That we as a department thought it was important to get in an outside organisation to quality assure our policy thinking on this, and they agree with our analysis that the best way to do this is to provide it as a discount on a bill. So that's the approach we're taking. We're not complacent about this, but we're reasonably confident that a good scheme can be developed within a £30 million cost envelope. Our main concern is to how we get this to operate alongside non-domestic revaluation, which also takes effect on the same date. So that's what's causing us a bit of a headache at the moment. But I'm sure we'll be able to find a way around that. But on its own, a transitional relief scheme for RPA is both workable, deliverable and affordable, in our view. That's not to say there isn't an awful lot of work to be done. And there are further decisions still to be made, and we will be consulting on those, as I say, in the spring. So that's race convergence. The other issue is this issue, and I was touched upon by Mr. Weir at the last session in relation to revaluation, which is a mechanism for helping to fund the functions that are going to transfer to councils. And 2 or 3 years ago, there was a lot of consideration as to whether that could be done through just increasing the district rate but having a regional rate offset. We've done a lot of analysis on that, and we believe that is not a workable solution. At the other end of the spectrum, we've also looked at whether these transferring functions should be funded through direct payment of grants from the donor departments. We also feel that that has major problems associated with it because it brings it within the realms of public expenditure with all the bidding, monitoring and control issues associated with that. So what we are proposing is a mechanism that's kind of halfway house. It would operate like a grant, but what we would hope to do is use the rating system in a way that provides a rate-based supplement to each of the 11 new councils to allow them to pay for that, and that would operate as a grant, and we would allow councils then this extra rateable value to pay for these transferring functions. It's not going to work for some of the major capital projects, but it will work for recurring expenditure and maybe some of the smaller capital projects. It's an approach, again, that's been endorsed by the Institute of Revenues, Rating and Valuation, but and also the two ministers, and we have been engaging very heavily with the various reference groups that we deal with in local government to explain the workings of this. So that's our current thinking on how we're facilitating RPA. The big issue, I think, for us is getting rates convergence, transitional relief to work, and to work with any support that is provided as a result of the non-domestic revaluation. We've currently reached a hiatus in our analysis. We can't do any more analysis until we know what the district rates are going to be next year. But once we do have that information, we will be undertaking further analysis and then going out to consultation. In relation to the transfer and functions scheme, we are taking a enabling power within the local government bill at consideration stage.
DOE are currently working with OLC to draft the provision for the transfer functions mechanism, and that would be put forward. They expect the consideration stage of the DOE bill. Currently, that's at committee stage. That bill, as we speak.
So there's a lot in that, and I'm more than happy to take questions.
In terms of the £30 million for the transitional protection scheme, can you elaborate any more in terms of how that figure was arrived at? And you said you're reasonably assured that we'll live within that particular budget.
The reason I can't say absolutely assured is because I don't know what the district rates are going to be next year, and that's a big unknown, and we don't know the impact of the non-domestic revaluation. But you know, I'm not losing any sleep over the fact that I think that should do it.
Yeah.
In terms of a scheme that will at least protect ratepayers from some ratepayers from, well, all ratepayers who would otherwise face sudden and excessive increases as a result of councils coming together, or ratepayers moving from Castlereagh to Belfast or Lisburn to Belfast. I think this can be done.
And how is that applied precisely?
Pardon?
How is that applied precisely?
Well, it'll operate as a discount in the rate bill, and it'll be applied by LPS. Councils will continue to strike the one district rate. I mean, an alternative was to have given grants to councils and allowing them to strike differential rates, but I don't think that would be deliverable.
In terms of the forecast, what forecasting has the department undertaken to identify what savings or efficiencies will be realised once the transitional protection is exhausted?
Well, it's not analysis that DFP is undertaken. It's really more a DOE matter in terms of the efficiency of the RPA process overall. But it is our view that after about 3 years that the savings from RPA should start to materialise, and this will help moderate district rate bills. Mm-hmm. So that's another reason why it's a transition scheme, because we believe that RPA will lead to more effective delivery of local services at a lower cost, and therefore district rate bills should be moderated accordingly.
Mm-hmm. Okay, Peter.
Yeah, thank you, Chair. As you say, Brian, lot the keys into it. I mean, first of all, I suppose particularly, first of all, taking the rates convergence side of it, I appreciate because there's a degree of developing work ongoing on this. We can't get an absolutely precise picture on it. I suppose the first bit is, in terms of, we're looking at the 30 million, talked about the period of 3 to 4 years, but would you see that sort of transition as being a sliding scale reduction over whatever period is there, so that, you know, for the sake of argument, if it was, say, a 4-year period, it might well be, say, you know, 11 million a year one, but it might end up then be about 7 million a year, you know, so that from that point of view, I suppose, rather than simply a straight line side of things on it. I suppose the second issue in that is, I mean, do you feel you'll be able to proof this in such a way that there won't be the unforeseen circumstances of any level of, almost, if you like, rewarding bad behaviour rather than, you know, which is essentially, if you take, for instance, say, at present, with some level of knowledge that's coming down the line, a council which already has a much higher rate than, say, its neighbour, almost incentivising a situation where, to gain the maximum amount, they would say artificially, but potentially at least, aren't that worried about convergence immediately, but actually are happy enough before they merge to actually put things up a bit further, to actually widen the gap a little bit, sort of draw in more money. Do you feel you've got something, do you think it's likely you'll be able to get something which is secure enough to prevent that?
That's a very good point, and it's something that we have considered. We think we probably need a mid-term review mechanism within the convergence arrangements to ensure that that doesn't happen. So if there are some undesirable behaviours in terms of striking rates or council spend, that DFP can go back and review.
And I presume the other point, just to be made, is probably more a point than a question on the rates convergence. Obviously, the issue a bit as well is that it's very understandable, and I think it's quite reasonable for people who, really through no choice of their own, potentially, if there was no intervention, would be left with, you know, possibly sort of very large rate rises, but there is some degree of protection for them. I suppose the problem a little bit, obviously, is the only way ultimately that can be applied is then to have an overall sort of suppressing downwards effect in terms of the level of rates across the borough as a whole. I suppose what that will mean is that, whereas, yes, it will mean that you'll have some people who will then be better protected, on the flip side of the coin, from other people coming in from councils, will actually get a double benefit RPA, because if you're moving from an area which is a much higher rates bit, automatically the convergence with a lower rates area will actually bring down your rates, plus you'll benefit for any transitional relief, because if you take a sort of, say, a Fermanagh Oma situation with a wide degree of divergence, you know, if there ended up being, I figure they said it was £2 million in the first year that effectively was got to that council. Taking out the example, it won't just be the people in Fermanagh whose rates potentially be going up who would benefit from that 2 million. It's actually the people in Oma also will benefit from that. So there's like a double bonus in that.
The people in Oma won't get a discount on their bill, but they will pay the new rate, which is likely to be lower. So the transitional protection is only for those moving up to the new average rate from the lower rate. So it would be in that particular example.
So
it would only be for Fermanagh ratepayers that would see the benefit of that.
It's almost like a sort of form of rate rebate type.
So they will get a discount on their bill.
Okay.
And you know, the model you suggest, a 4-year scheme, maybe 25% would pay of the increased 50 next year. The following year it would be 75, and then up to the full. But it would only be, the transition protection would only be those who would otherwise face sudden and excessive increases as a result of councils coming together, or as a result of ratepayers moving into Belfast. And the same model should operate for both.
Okay, that's interesting. On the wider issue, I suppose, put it this way, I can appreciate this is maybe where, looking at the short term, though, I can appreciate the short term. The rates convergence is the bigger issue for you in terms of what needs to be put in place. I mean, maybe didn't mean it just quite that way, but where maybe slightly take issue with you whenever you talked about that being the more important issue, to my mind, what is done in terms of a long-term rate settlement, because that's something that could be there for 20 or 30 years. I would arguably say is in one sense the more important issue in the long run to crack. In terms of the sort of hybrid model that you're looking at, which I've heard referred to as probably reasonable as almost sort of a notional buildings notion.
Yes, yeah.
You know, and
That's a good analogy, yeah.
And I think it's a reasonable enough approach. The one issue, I suppose, where I could see potential problems with local government, and I suppose protecting both local government and particularly ratepayers, how do you, I can see that being a reasonable way of doing things, but how is it provided that there is assurance that in taking that step, that is something which protects that position for the future? Because obviously the one weakness that was very much highlighted with a simple grant basis was, well, if you get into a situation which there's tougher economic times, so there's maybe, say, cut in the block grant or whatever, the fact that if you you have a grant which probably legally you don't have to give, that's an easy thing in many ways to cut if you get a minister with a particular pet projects that they want or whatever. And I suppose that's why, to be honest on it, there'd be no enthusiasm for a pure grant within that. From the point of view of like a transfer on the basis of like a notional buildings, I mean, do you enshrine that in legislation? Do you have something therefore that can provide a clear-cut reassurance that is something?
That's exactly what we're going to do.
Okay.
We will actually set out in regulations, which this committee will scrutinise, an NAV for each of the councils. So we will know at some point we will know what the cost of these transferring functions will be, certainly in relation to resource and smaller capital, and then we will work back and calculate an equivalent rateable value using prevailing rates and enshrine that in regulations, which is subject to scrutiny by this department and the will of the Assembly. So that is the protection. That's not to say that the Assembly at some point in the future could decide, well, we don't want to do it this way anymore, or it's not affordable.
No, I mean, understand that nobody can.
That's the protection for local government.
And then I suppose the other point, which is that gets around the main bit. I mean, do you have in terms of on a sort of either a notional value or it will mean an effective transfer of money in that way? Do you in some way either inflation-proof that, or how do you have a situation? Well, presumably, if there's a notional block, which means that, in effect, I mean, I think it's plucking roughly a figure out there that's maybe about £100 million worth of services are transferring over. Yeah. Well, if those weren't transferring over 5 years down the line, if those would simply remain with central government, the odds are they wouldn't still be costing 100 million. They'd maybe be 120 million by that stage, or whatever it happens to be. You know, how do you ensure then that from that point of view of a notional value, it isn't something which is purely then ring fence to be set in stone, that, and indeed almost, if you like, any additional inflationary costs then that emerge on it aren't simply just by inference simply transferring it over to ratepayers?
Yeah, well, that's why it's geared to NAV, because then it'll be whatever the prevailing district rate is, will be the amount of increase that council will get by way of grant, and that's to protect local government in terms of the vagaries in bidding and monitoring and control of public expenditure. It takes it out of that annual negotiating realm.
No, I mean,
and you know, prevents donor departments from deciding, faced with budget cuts, to deciding just to cut it. So every year the grant will be increased by whatever the district rate in that district council area increases. So that's your inflation proofing.
Yeah, I mean, I think that's very helpful, because I think obviously if you had something that was dependent upon the individual departments, I would have thought if you were sitting as a minister faced with a choice of, right, I've got to cut more or less make £10 million worth of cuts in my department or whatever it happens to be, actually here's how I can cut out £5 million of that without costing the department a penny, because effectively I'm saying actually I'm not, you know, that would be a very tempting route for a lot of ministers at times.
So, and it'll operate in the same way as the deed rating element of the general grant, or what used to be called the general grant.
And obviously in terms of timescale, that would effectively meant to kick in then for 2015.
Yeah.
Okay.
From 1st of April 15.
Okay, Leslie.
Thanks, Brian. Just taking that example out, really covering ground, just exercising my thoughts there. You really would have 2 or 3 societies then in a council area, if I can call them that. And if, for example, that council had decided it needed a 5% increase, That then in effect would be apportioned over those 3 different areas depending upon the sort of historic rate base that they were used to. Is that right? And
No,
how would that actually work?
it would actually be a clean start on the unified district rate based on the new values that are produced for the revaluation. So we would work back and provide an NAV. So it would be a clean slate. There wouldn't be any need to apportion over the other district councils. So it's kind of a new beginning. Here's the new NAVs produced by the revaluation, and here's a supplementary NAV which we'll provide to you by way of a grant.
For each of the 11.
For each of the 11, and that's how it would operate. It's not going to work for major capital projects that straddle April 15, or existing commitments, or some of the big regeneration things. But for everything, for all the resource spend, and for as much of the smaller capital spend as possible, I think it could operate effectively.
Well, just taking that on a stage further, if, for example, the new council then decided to dispose of assets, how would that go into the mix, bearing in mind that the assets would come from one particular area?
Well, that's all part of the financial management associated with that council. I'm not sure that would wash back on how much grant somebody, how much of this rating supplement grant they would be paid. They will be paid that rating supplement grant. That won't vary.
There's no effect.
It'll vary by the district rate, but it won't have any effect on that. It won't require a recalculation because somebody sold a major asset. And this proposal, I mean, it's far from perfect, we accept that, but it does preserve the independence of local government.
And how long do you think that will take to work its way out?
Well, we'll prescribe it in regulations, and as long as it's needed and as long as the Assembly agree, it will remain in place.
But it should be for a fairly short period.
Well, for the foreseeable future, I would have thought, yeah.
Okay, thanks, Chair.
Okay, members. Brian, Financial Provisions Bill.
Right, yes, thank you. The Minister has asked for a further consideration stage amendment to the Financial Provisions Bill. This is to do with small business rate relief. As this committee will know, and this committee has a keen interest in, there's to be a full policy evaluation of small business rate relief beginning in the spring, and we're already gearing up for that. In fact, I've had some discussions, as has the Minister, with NICEP, the Northern Ireland Centre for Economic Policy, to perhaps get them involved in it, to give the evaluation some independence. So we're moving ahead with that. As part of that thinking, we've been looking at the legislation, and the legislation currently provides that you can only provide small business rate relief by a percentage reduction to a rate bill. And we would like to allow it to be not only a percentage reduction but also a specified amount if necessary. And the amendment we would like to make through the Financial Provisions Bill is to the existing enabling power in the rates order, just to give us more flexibility. We don't know what the outcome of this evaluation will be, but it's to accommodate a wider range of options and to give the Department more flexibility in relation to the future of small business rate relief. And it's to amend Article 31C of the Northern Ireland Rates Order 1977. And it's just a minor tweak. Instead of just saying by a specified percentage, we wanted to say by a specified percentage or specified amount. And as I say, it's in anticipation of the policy evaluation for small business rate relief, which will set the direction for the future of that policy. And we want to just make sure that the legislation is fit for purpose to do that.
Just, in regard to the rationale for going for specific amounts rather than percentages, is it fair to say that the Minister is minded to go in that direction?
No, not at all. Not at all. The Minister is completely open mind, but he wants to make sure that he has the freedom to, to implement whatever recommendations come out of the policy evaluation.
But he would seriously consider that option.
Pardon?
He'd be seriously considering that option if he's bringing this
Well,
forward.
as I say, he's an open mind on the matter. He wants to see what the analysis shows, and as a department, we also would like there to be. There's certainly going to be a consultation, and there's going to be research, but we'd also like a little bit of independence in this evaluation because of its importance, and we are looking at the possibility of involving NICEP at the University of Ulster in undertaking some of this work.
Why is this only coming to the consideration stage of the bill? I mean, certainly the bill has been through this committee, and it would be best practice if the department had already this included within the bill before throwing this in from left field, you know?
It's only recently that we've been looking at this evaluation. It's only recently we've been having these discussions with NICEP. But had we realised that earlier, we would have put it in earlier. But we hadn't, so I'd put my hand up for that.
Paul?
Thank you. It's just on the rationale of it. I'm just not totally clear. Percentage is quite straightforward for people to actually work out because they know what their bill is, what it has been historically, and whether they fall inside the ceiling that has been set to allow them to avail it of the rate relief programme for the small business. Is the reason for introduction of that so as there is a maximum amount of reduction that a business can receive?
No, it's not. It's either to allow it to be done by a percentage or to be done by a specified amount. It's not to do with capping. It's to do with adding flexibility to whatever outcome there is from the small business rate relief evaluation.
Yeah.
And in putting this into the enabling power, of course, it would require regulations below that, which this committee would scrutinise and challenge, and also would be subject to the will of the Assembly.
But by specifying an amount, and say, I'm just going to bluntly say £200. They include a figure of £200 or whatever that might be, or £1,000. That would mean that if you were going to apply it, it has to be applied fairly across the board, and somebody who has, it gives you the opportunity then not just to deal with people who are falling within the rate bands. Is that the reason to allow relief?
It's not, and there's certainly there's no suggestion that there's any will on DFP's part to be less generous in whatever outcome we come to. It's not a restricting power; it's actually a widening power. What we're after, we just want to allow for a wider range of eventualities. It's nothing more than that.
The percentage seems to work for me, but I just cannot. And I appreciate that the rationale for bringing forward where a prescribed amount could be identified, and I just don't see how that maybe works in on a fairness basis, because a prescribed amount would be universal to somebody. Say, for argument's sake, at the present moment in time it's up to £15,000 that they can avail of it. If their rate and value is below that, they can get their 20% reduction. If somebody has £10,000 of a rateable valuation, somebody has a £15,000 rateable valuation, both of them, how do you work the amount? If you specify an amount, there's no unfairness there.
Well, the pros and cons of whatever approach is taken will be presented to ministers and for them to decide in due course. This is only a small tweak to an enabling power. We're not trying to, limit a scheme by the back door, or we're not trying to. We're trying just to give the minister maximum flexibility in what is available through the existing legislation.
I'm still not totally clear on the thing, but I appreciate that. I would maybe have a wider discussion with you at some other stage in that matter.
I'm more than happy to do that.
I do not. I don't quite grasp exactly what why it's been brought forward, because to me, a percentage, everyone knows exactly what they're talking about, and it's fairly fair. Whereas you start the introduction, I'm not convinced on it, but that's beside the point.
Thanks, Paul. Mitchell?
I have the same confusion as Paul has identified. There would be a decision made at particular points in the either in the overall budget process or in the evaluation process as to which option was being applied.
Yes. You're right.
So when would that be ideally?
Well, we would have to make regulations probably in the autumn.
Prior to 15, whenever the scheme runs out at the moment.
And thereafter?
Yeah, the scheme, the existing small business rate relief scheme will finish in the 31st of March.
No, I'm talking about the operating of the new scheme. Okay.
So the new scheme,
the
in terms of so to enable the continuation or for a new scheme to come along, we've got to make regulations, and that would be the autumn of this year.
And thereafter?
And well, that could operate for 1 or 2 years or whatever is decided by ministers.
But we're talking about flexibility.
Yeah.
And if we were considering a more flexible approach from 1 year to another, when would that be? You know, if this, say we just opt for the percentage basis, but an argument emerges at some stage that there might be a better way of dealing with it, and you've given yourself this inbuilt flexibility.
Yep.
What is the process of calculating that out, costing that out, and taking it through the assembly process?
Well,
and I'm particularly interested at what stage in the year, and of our financial year, we would be dealing with it.
Well, the evaluation will begin in April. It'll take a couple of months to do, and then as part of that there will be a consultation. It'll probably take about 3 months to do, and as part of that there will be a consultation, and then informed by that consultation and whatever additional research that we commission or do ourselves, we will present a range of options to the Minister, and then the Minister will go to the Executive with those options fully costed and decide on a way forward from that, which will be also informed by the outcome of the non-domestic revaluation, because the results of that revaluation should be known by that stage. That's why we can't start it any earlier, because of the ongoing revaluation.
Okay, and having went through and gathered up all of those different kind of processes into an outcome, so you know what the district, you know what everything is.
Yep.
You then decide that we're going to go, and I'm just going to, for illustrative purposes, discuss the percentage approach. At what point would that be reviewed in the next evaluation cycle?
Yeah. Well, it could be reviewed at any time. I mean, it can't last more than the life of the valuation list. So the maximum it can last is when the next non-domestic revaluation occurs, because it uses rateable
doing
values.
that now on a regular cycle.
But put it this way, we introduced this in April 2010, and it's been supplemented on 2 occasions since then. So we got the original scheme, then a changed scheme, a more general scheme, and then a more general scheme again. So it's already been reviewed twice. So we can make regulations that will exist for the life of the valuation list
Or the budget.
or the budget. But if there's a need to change the scheme, it can be easily changed, and we've done it before twice.
Okay, well, it sounds like taste it and see, and I'm looking forward to that discussion. Okay, thank you.
Okay, members. Yeah, Brian, Andrew, thank you both very much again.
Thanks very much.
Okay, members, moving on to the outcome of the January monitoring round. At your table papers, there's a copy of the Minister's statement. Bridget, Peter and Stephen, you're all very welcome back to the committee. Do you want to make some opening comments, or should we go straight to questions?
I can make a short opening statement if that's helpful. Okay. As you see, the Minister's statement started off with a little bit about the autumn statement and the outcome of that. And as you can see, what the Minister said, it's fairly good news in the short term. Some extra allocations for next year and 15-16. But actually, in the longer term, for the rest of this decade, essentially, we're going to be heavily constrained on the resource side in particular. So that's going to be very, very difficult going forward. And it's in that context, as you would see, the Minister expressed concern of this lack of progress on the welfare reform and the 15 million they have to set aside this year and potentially 60 million next year and up to or even above 200 million going forward. Okay, so into the January monitoring itself, the key concept here is the budget exchange scheme and the ability of the Secretary to carry forward 51 million into next year and about 12 million capital. Okay, so in terms of reduced requirements, there was 33 million resource and 35 million capital coming back from departments. You must take into account the overcommits to carry forward from October and the send items. The Executive had 13 million resource there to hand out and 27 million capital there to hand out. The reason they only had 13 million resource there was partly because they set aside this 15 million for welfare reform, as I said. The Executive then allocated out 38 million resource there and 27 million capital there, 30 million to health on the resource side. Most of the capital went to DRD, there was 24 million, mainly for roads, and there was 6.3 million to DART, split between capital and resource for capitalist allowance and the rural development programme. Okay. Another big announcement was on the financial transaction side, the University of Ulster deal, where the University of Ulster is getting £35 million, 25 million this year, 10 million next year. Against that, the Executive is getting 7 million back from the UU reserves in 15-16, 16-17, and that will then benefit the Executive in those years. So in terms of the overall outcome, a 25 million overcommitment on the resource side, and just a little bit left over on the capital side, but 300k. And there's also 5.9 million left of the financial transactions capital deal, which will carry forward to next year. And the intention then is to try and maximise the amount that's carried forward under the budget scheme to next year at the year end. Okay.
In terms of the health allocations, I was looking back to October, and in terms of resource, health has got obviously 30 million in terms of the January monitoring. I got 14 million back in October. Now, in terms of budgets for 2011 to 15, there was special terms agreed for the Department of Health, as the committee knows. So I can ask what monitoring arrangements are applying to the Department of Health in regard to those budget requirements, and how do they differ from other departments given that exceptional status that health has?
Well, usually health shouldn't bid for resource in year monitoring, and they get to keep their own reduced requirements for internal reallocation. That is essentially the arrangement. Now, it doesn't stop them bidding, mind you, when they have pressures, which they have done. But if the Executive have the funding available, you can see they are happy to allocate it to what they deem a high priority area.
Because the guidance makes reference to the fact that the Department of Health should not bid except in the event of major and unforeseeable circumstances.
That's right.
So in regard to these bids, does the Department of Finance accept these as major and unforeseeable circumstances?
We accept some of them were. The likes of the winter pressures, some of the other pressures that built up over the last year.
Some were and some weren't.
I think Agenda for Change bid, for example, it's a reform programme. It doesn't know what it shouldn't be unforeseen. It's a planned programme.
Yeah.
They wouldn't accept that bit of it. But the winter pressure certainly.
So they haven't kept to the guidance, then, is what you're saying?
I think. Well, it's guidance. As I said, it doesn't stop them bidding when they think they might get a slice of the cake, essentially.
Okay, members. Leslie.
Could I maybe just go over with you, for the benefit of my own knowledge, on the year-end flexibility scheme?
Yeah.
We were told yesterday that the Department of Education had not drawn down any of their existing 46.7 million EYF stock, right? So they're hoping to carry that forward to the next year. I know that there's a formula on how much, in fact, is allowed to be carried forward. Is that part of the budget exchange scheme?
It's not. This is a separate scheme just for schools, and it's an internal Northern Ireland scheme. Basically, the way it works is that, say, they have this 46.7 million stock at the moment they can draw down from, but it's a net effect. So out of the hundreds and hundreds of schools we have, some will build up reserves in a year, others will draw down. So if say there's more schools drawing down reserves than there are schools saving, education will come to us and say, well, the net effect is about 5 million this year. We look to draw down 5 million. But in this year they're saying there's actually the drawdown and the reserve or the savings equals.
Okay, so it's education only. It doesn't block other
nothing else,
departments
no. And it's
at year end.
It has no impact on the year end at all.
That's
stock this cash forward, so they'll come to us in June next summer and say, well, our guess this year, our estimate this year is that we need maybe 3 or 4 million of that net effect, and then they'll give us a final declaration in January monitoring.
Right. So education.
It doesn't impact at all on the budget change.
I'm glad about that. Clears that. The other one is the capital transactions situation. Obviously, that's loans that can only be used really in the private sector. We were lucky, I think, enough in managing to get the the University of Ulster situation. What plans, if any, are ongoing to ensure that we use that up?
We're looking at a lot of schemes at the moment. Next year we have slightly more available than we had this year. Obviously, the agri-food scheme, as you saw, that was 10 million came back from that due to timing. They simply couldn't get out the door this year. There's already 10 million in the DEDI budget, but I expect them to spend 20 or 30 million next year on that scheme alone.
But is there any body of government working with the private sector to ensure that these projects are developed, bearing in mind the long lead time there is?
It's very much DFP driven at the moment, but SIB is working with us on that.
It's all your fault, is that what you're saying?
Well, it's all my fault. We've got schemes so far. SIB is working with us on that, so we're working on a number of schemes that will spend quite a significant amount of money in certainly 15-16 onwards.
You don't have any private sector groups involved directly with you?
No. We have been talking to the likes of the CBI and
is that not important
IOD.
to get that message out there, because it's got to come from the private sector?
Yeah, well, it's got to come in part, but the problem we have is there has to be some sort of a government scheme to roll it out, because you can't just give, for example, a private company a loan. You can't work directly with it. You need to work out a scheme. I think the way to do it is to try and work with the private sector to see where's the need for funding, and there has to be a need that the executive actually has a role.
I don't want to labour that point, but surely you must need private sector engaging with you.
Oh yeah.
In the formation stages.
Yes, we do. Yeah, and we
don't have a body to do that.
SIB is taking up that lead role because they have a role anyway in working with the private sector in terms of EFI and that sort of thing. So they are working both with departments and private sector where necessary.
Thanks, Peter.
Chair.
Thanks. I was asking the Minister yesterday, but he didn't have an answer for me about the reduced requirements of, I think it was 2.1 million for legal cases.
Yes.
What lies behind that?
The DFP one, Bridget?
And I know when I came to this committee in December to talk about our reduced requirements, we had a figure of 1.9 million at that stage. It was actually to get down to the sort of thousands. It was 1930,000. We always review immediately prior to submission our reduced requirements, and at the time that we came to submit in early January, there was another legal case that we had kept 125,000 aside for. That also became apparent that it wouldn't be settled in the current financial year, and so that extra 125,000 then we also surrendered, and that brought our total to 2055,000, which rounds up then to the 2.1 million.
So you will be seeking this money again in the future?
We will, I would imagine that we will be able to contain that within our budget allocation for 14-15.
Okay, thank you. Thanks, Chair.
Just on that point, I know a couple of members of the public raised with me the issue of equal pay. I want to know when that's going to be dealt with in terms of some of these reallocations. So is that something that you would foresee being dealt with in the next financial year?
Sorry, which equal pay?
Equal pay for civil servants? Because the Minister had said in September it was an issue he was going to deal with.
The NIO.
Yeah.
NIO.
Right, I couldn't comment on the NIO issue so much, but I know that the Minister's still got that one under consideration. So it doesn't impact on the DFP budget directly.
What was that again, sir?
I know the Minister still has that issue under consideration.
Yeah. And do we know when he's going to finish considering it?
No.
Not at this time.
Not sure, no.
He did answer in questions yesterday.
What did he say yesterday?
He just basically had conversations with the Justice Minister, and they're both working together to try to come to a resolution. So.
As and when...
I think he did say that he's trying to move away from the equal pay label, because obviously the equal pay issue has been resolved in courts. So I think that's where the confusion sometimes comes in. But he's...
Not confusion, it's flexibility. And give him enough room, I suggest.
But the work's ongoing. But it's now included the Justice Minister, so hopefully that will help move things forward. He's willing to move with them. But
and certainly there are concerns about creating wider liabilities as a result of making those payments. So I know that's one of the reasons that it's still being under consideration. But I don't know the detail myself.
No.
Good answer.
Well, it's not a pressure to come across our desk yet. No. But it will, I'm sure, in due course.
Another question that comes to mind is in terms of the end of year and how confident the department is that the executive will not be returning monies in April.
We would be very confident we won't. The biggest risk is on the capital side, I think.
Yeah.
As it's only 12 million carry forward.
There was a lot of capital
came in. Again, we managed to get it out again.
Last year.
But it's always a risk, because it takes one large capital project to have a delay at this stage of the year, and you're sailing close to the wind. So we've managed it so far the last few years, and we hope it's going to be the same again. But you are always, it's a hope that nothing major is going to happen the last few months of the year.
Yeah.
The capital is difficult to spend at the year end.
Is there any concerns with any particular major projects? Or?
No, nothing on our radar. But that doesn't mean that nothing can happen, unforeseen can happen.
Okay.
Chair, I did raise a point with the Minister yesterday about working up reserve projects.
Yeah.
To an advanced stage. I think that makes a lot of sense to have those.
We are
looking
again, working with the SIB to try and identify a few projects we maybe can action in March, if things like buying out, for example, debt or buying a building that might be needed for the estate anyway. So it's things that could make sense.
It does make sense.
So we have those that we hope to be able to action at the last minute.
Good. Or the Maze Centre.
No comment on that.
Nice try.
Okay, members. Okay, folks. Thank you.
Right. Thank you. Well done, Peter.
Okay, members, going to seek agreement that the committee commissions some research on financial transactions capital, including how this facility has been applied by the other devolved governments. And this would inform the committee's forthcoming report on budget 2015-16. Agreed?
Yeah.
Correspondence?
Just one item of correspondence to draw members' attention to, Chair. Page 119 of the pack. It's DFP monitoring report on savings delivery plans across departments up until September 2013. Some departments reporting that they will not meet targets, and several indicating potential impact on frontline services. DFP isn't, as a department, isn't one of those departments that have reported such, but it's really for copying to the other statutory committees for scrutiny as applicable, Chair, if members are content.
Agreed.
That's all the correspondence.
Okay. Draft work programme then, pages 159 through to 163. And can advise members that next week the committee will be conducting its meeting at the Law Society's headquarters in order to discuss the forthcoming legal complaints and regulation bill. And it is expected that several submissions will be received and will be issued to members. Can I seek agreement that any written papers received are forwarded to the department in advance of the next meeting and also uploaded to the committee's webpage?
Agreed.
Can inform members the bus has been arranged to depart from Parliament buildings at 9:30 a.m. sharp. And the bus is then scheduled to depart after the meeting at 12:45 p.m. Can I also advise members that Alan Hunter, the Chief Executive of the Law Society, has issued an invite to members on an individual basis to attend lunch after next week's meeting, and that is on page 27 of your table of papers. And can I ask members to indicate whether they intend to stay on for this lunch, but advise that anyone intending to do so may wish to make their own travel arrangements, as the bus will be returning to Parliament buildings prior to this lunch.
Such things as free lunch.
If members could contact the Secretary just in regard to that over the next number of days. Members content that the work programme is updated to reflect any agreement made today?
Agreed.
Any other business?
No.
Okay, the next meeting, yet again, is in the Law Society House, Victoria Street, Belfast, 10 a.m. next Wednesday.